Welcome to Morningstar. Our latest stock of the week is BP, which has just released figures for the first quarter. These are highly profitable times for large oil companies, with rival Shell also announcing bumper profits. But that has intensified calls for a windfall tax. The Ukraine war has boosted oil prices, of course, but BP was one of the oil majors most exposed to Russia through its 20% stake in Rosneft. BP has just written down this investment by more than $24 billion. And there is uncertainty about the true value of this venture. BP shares are up 20% this year, but they still lag Shell, whose shares are up 36% in 2022. This difference shows the varied dynamics of both companies and the somewhat uneven link between oil prices and oil company shares. Still, this is the first time since coronavirus that BP shares have moved above 400 pence. Our analysts think they have further to go, assigning a fair value of 475 pence to the shares. In terms of investor incentives, BP is stepping up its share buybacks, and shares currently yield nearly 4%. So what about this windfall tax? BP and Shell's share price gains this year suggest that investors are taking these risks in their stride. BP itself has attempted to head this off at the pass by pledging billions to UK energy projects. A windfall tax may be popular with the public, but is unlikely to solve the cost of living crisis on its own. It's also rather a blunt instrument for incentivising a fossil fuel company to focus on green energy. After all, it's the politicians who will decide how this money is ultimately spent. For Morningstar, I'm James Gard.